right. Wednesday, 12:55, 24, 5 seconds, year 2024, 5th month, April 8th day. Always a jizz to see. Always some jizz to see. Jizz to see. Ecstasy. Eggs to see. Jizz to see. Is the wise man always right? No, he can play the fool. There's always some jizz to see. It's always a mystery. Mystery and mistake. Eggs to see, jizz to see. There's always a new child born. Well, let's go to the charts. Or shall go to the charts. These are the latest charts here. The ancient trading methods. So here we have day 1, day 2, day 3. The blue dotted line is closing price, previous day's closing price. The green lines are high of the day high, and the red line are day lows. The white line looks like mountain ridges tops going up and down is the universal average. The 20 EMA exponential moving average. The yellow dotted lines, horizontal yellow dotted lines, are monthly high and low. The vertical pink line is the Asian session open. The yellow pink line is the London session open. The green vertical line is New York session open, and the light blue vertical line is the stock market open. So there's day 1, day 2, and day 3. Day 1 is Monday, day 2 is Tuesday, day 3 is Wednesday, and we get day 4 and day 5 coming up Thursday and Friday. There we are. The private military credentials. Now back to the charts. So each day has been in a downtrend. Looks like day 2 we had a slight green day. And a green day is a there's a higher high above the previous day's closing price. A higher high above, well, no. A higher high above the current day price. So we have a green day on day 2. And then we have the lower low on day 2, which is the setup for the down move. We can zero in on that lower low here. This is day 2. The higher high on the left is the first green day, closing above or putting in a high above the closing price, which the closing price is the light blue dotted line. Previous day's closing price, and that lines up with the session vertical line, the dotted, very light, thin dotted line. And there's the 15-minute bar right there. It goes right even with that bar right there, the white bar. Can enlarge it a bit here. Yeah. So that bar right there, going up and down on that white bar. I'll move this over some, so it goes right in line right there at the bottom. Actually, it's going to be the top, because this is a white bar, which price is going up. If it was a black bar, we'd move it down to the bottom. So the next bar next to it is a black bar. However, that's the next, that's the 3 o'clock hour. Closing price is at that white bar here, which is 2 o'clock hour, 1400 military time, otherwise known as the New York close. So this goes all the way up, it goes to the top of the closing price. And tap on it to keep it in place. So we have day 1, previous closing price on Sunday, and then the market started off going down, up, down, up, down. I suppose I could use an arrow to use this arrow to as an instrument to as a pointer, be a pointer. So there. So that's cool. Now you got something I can. Let's put it this way. So yeah. So here's day 1 again. And let's see, let's put it this way. Yeah, day 1 right there. And then the parentheses, using the Elliott wave tool. Elliott wave has 5 waves, so there's 5 Roman numerals to use to count the days. This is a mobile app, so it has limited tools. day one. Here's opening price right here, which is the solid light or dotted light blue line. So price opens up, goes up slightly, goes down, goes up, goes down, goes up, comes back down, 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 and then closes at 2 o'clock here at New York time right there. And so this is the high of the day, which for now I'm just putting it at the looking to tap on this thing. Bottom one's functioning. Tapping on it and it's not lighting up. That one lights up. That one lights up. I need to move it up and down slowly. Let's go to the 5 minute. Or go to the 5 minute here. Get that out of the way. Huh. Go to the 30 minute. See if that can get it. Yeah. I'll just see. Could turn it colors. Yep, there's the green. So that is the one there. Let's delete the fucker and put a new one. So I'll copy this one. So there we are. There. It's right on the closing price. That's perfect. Move it over a little bit. Now it won't fucking shut off. The arrow shuts on and off. Let's go to the 15 minute. Might be something going on with the screen, so I'm gonna wipe the screen down. It'll shut on and off right there, but it won't shut up on and off right where I want it. Move it. It'll shut off right there. Huh. Shut off up there. When I bring it to that spot, it just didn't want to shut off. Move it over here. Well, I'll just set it up here for now. It didn't want to shut off at all. The fuck shuts off there? Maybe I put it thicker. Thicken the line up. Maybe it's too thick. Might be it. Yeah, let's thicken it back up. Shit, it's getting hard to see in the sun to get out of the glare. There's that. For some reason it just doesn't want to shut off. I'll just leave it right there. It's day one anyway. The day's fucking over, so. Alright, so anyway, so day one. So after day one, then it came down here at closing price here in New York, 1400 Pacific Standard Time. And then it opened and it crossed. Well, it made a little low. It went a little bit lower on the opening, or starting the new day. Let's get this thing over this way. Yeah. So here it opened up. This line right here is thin white dotted line is the New York session close. So it goes from New York session close over there to New York session close over here on the other side. So it came down a little bit. Enlarge it here. So price, there's the white bar closed at the top of the white bar. Then it looked like it rose at 3 o'clock or 1500, and it came down. And the next white bars, it started going up, and it went sideways, came down, and then it went up here and put in a high. Day two. Put in a high above the closing price, previous day's closing price, the light blue dotted line. So that's called the first green day, because it put in a high above closing price, using the green line as the high. Of course, down here is the red line for the low. So that's the first green day. So we wait for price to come back down and then put in a lower low. And that right there is the spot to get in the trade. So these are the old ancient trading methods here, where everything is based around the high, the day high, the day low, and the closing price. Day high, the day close, or the day low, and the closing price. Which the day high is the green line here, the day low is the red line, and the day closing price is the light blue line, dotted light blue line. And there's other levels also to consider, but these three lines are the foundation. These three lines are the foundation. So now this point right here is considered the entry, and to get a good particular entry, we want to go down to the 5-minute chart first and look at it. So here it is again, right here. There's the lower low. Here's the first green day high, and there's the next lower low. So we look at this, and get the screen right here. This thing set up so I can. Okay, so there we go. So on the 5 minute, we have a engulfing bearish bar, the black bar. Which is a big longer bar. It's longer than the previous bar. And then here's the kind of a pin hammer right here. But we can narrow down the entry closer on the 1 minute. See what kind of go down to the 1 minute. On the 1 minute. Here would be an engulfing bar here. There isn't a pin hammer. There isn't a pin hammer until right here. Here's a pin hammer, which is a short black bar with a wick at the end, headed up. But usually when we get to this point on the 1 minute chart, we're looking for an M shape. The only thing we got for an M shape would probably be going up here, coming back down, going up, and then coming back down. So it would be like a head and shoulders. So up, down, up, down would be the M shape. So that would have been the entry point. Now, going back to the 15 minute. Day 1, day 2. Little arrow going again. So that would have been the entry point right there. And once again, there's the first green day high, which is called the trigger. And the trigger lets us know, or the trigger is an alert to look for the lower low coming up, and then enter right there. So once the lower low is entered, then there's the forecast of the projection of where price is going to go. And it usually goes from the higher high green line to the lower low red line. And price is usually at 0, 25, 50, or 75 counts. So here we are at in the yellow box. It says 2570.404. And so the 70 is the closest to 100. So the price usually moves in 25 point increments. So we just call that 75. So price is at 75, so we're looking for it to go down to 50. And then 25. 50 is around this area because this is 1.2545. 50 would be just above it. So price comes down from here. 50 is around right there. Up here is around 75. And then go down to 0. Zero is going to be around down here, 0.4 right here. So down to the 0, close to the 0 is usually where price goes. So that would have been a good target point for profit for a 75 pip run right there on the first green day. So now we're at day 3 and price has come lower. Here's the closing price. You can actually move the green line up because price has moved up a little bit. That one turns on and off easily. So now the market is consolidating in between the new low down here, the red line, and up in here, the new high. Put in a high right here and came down to the red and it came back up to the green. So this is called consolidation, this area right in here, in between the red and the green, going up and down. So this is where the market, the market movers, known as the big bankers, the people that the leader that runs the big bank, the leader that runs the big bank, and his banking gang members or club members are keeping the price moving up and down in this narrow range, and so that traders have an opportunity where they want to place their trades, whether they think the market's going to go up or if the market's going to go down. And depending on where all the traders, known as the retail traders, as well as smaller bankers, depending on where they put their trades, then the big bank, who sees where they put their trades, causes the market to run up or run down in the opposite direction, so as to cause the smaller banks and the retail traders to lose their money, known as stop hunts. So if most everybody put their trades down below price here, let's go to a higher time frame so that there. Okay, so here's the channel on a higher time frame on the hourly. Up here is the hourly. It says H1. It's hourly. So here's that channel. This is day 3 right there. Here's that same channel on a larger time frame. And there, we moved it up a little bit more. There. So if traders are wanting to go long here, then they're putting in their trades and they're putting their stop losses above the low, because that's where retail traders and smaller bankers, that's the training that they receive when they first get into learn how to trade the financial markets. They're all taught in the books and on the YouTube videos that if they think the market's going to go up, they're all taught to put their stop losses down below the red line or the day low. So they put their stop losses down here, some 20 pips, some 50 pips. It all depends on, how far down, they feel safe. So what usually happens is when the big bankers, they're sitting there watching because they have access to all the trades that are put into the banking system. The big bankers watch where everybody puts their trades, and if most of the people are predicting that the market's going to go up this way, and they put their trades in and they put their stop losses down here. So what usually happens is while the big bank is letting price go up and down, up and down, up and down in this channel, and they control the price too, so that it does only remain in that channel for some time, so that it gives a whole lot of retail traders and a whole lot of smaller banks plenty time to put their trades on. And so if most of them are predicting that are hoping for the market to go up because it's in a consolidation period, small range going up and down between a low and a high, green high and a red low, they put their trades on and they put their stops down here. And when the big banker has waited long enough for a whole bunch of people to put their trades on, so that there's a whole bunch of stop losses down here, if most of them has predicted that the market's going to go up, there's a whole bunch of stop losses down here. And so the big bankers say to themselves, or the big bank gang leader says to himself and gives orders to his gang, other big banks, that they are to move the markets down here and stop everyone out, and then cause the market to move up. Because that's the way they play the game. Some people might call that theft and trickery. But, that's why one starts to learn these ancient trading methods, and to be able to figure out how to trade with the big bankers, or with the big gang leader and the gang leader big banker clubs, and so that's what all these day 1, day 2, day 3 marking the charts up, and understanding and comprehending the language which has been around since electronic trading has come into play for the past 50 to 100 years. So one can go on YouTube or on the Google search and start to learn the old ancient trading methods. There's some older forefather traders that have written books, started websites and all kinds of stuff But one would have to sift through all the authors and books and previous traders to figure out which ones are actually teaching the ancient methods that have pinpoint accuracy to be able to figure out what the big bankers are bringing with the markets. So, in other words, one could say, let the luck let the luck be with you. let the force be with you. In other words, good luck on the education to figure out what's going on. And I suppose if one puts in enough labors and tired red eyes, and and have some universal trust and all that stuff, then one could probably sift through all the hundreds of thousands of books and websites and stories that people tell as to how to succeed in the financial markets. Anyway, so that's the British pound. Okay, here's the next market. Let's go back and shut this off. Delete that. Now go to the British pound. New Zealand. Go to the next currency pair. So going to the pound New Zealand. So here we are. Go over here and get another arrow. So here we have it. Another day one. So we have price from Sunday, previous closing price Sunday. It's the light blue line. So the market opened up at 2 o'clock Sunday afternoon, and it went up, went down, went up, went down, went up, went down, went up, and then closed at 2 o'clock on Monday, 2 p.m. Pacific Standard Time. And then we marked the high, the day high with the green line. And down here is supposed to be the day low. Actually, this is supposed to go up here to the day low. There, because that's going to be the day low right there, is that white bar. And so the next day, 2 p.m., market opens up again, comes down, and we got a little bit of a, it's not a close above the previous closing price, the light blue dotted line. Although it had a wick. There was a wick there, but the price didn't go above it. So it just kept coming down for the day. And had a day low there, 2 o'clock Pacific Standard Time, 1400 military. Day 3 comes up. And look at that, day 3, we have a high, a movement above the dotted previous day closing price here, the light blue dotted line. So there's a new low, a first green day. And then, so that's the trigger to look for a new low. So market comes down, comes back up, and comes about around the same level, which is also can be considered a new low, a new day low, a day low. New day low on day 3. Yeah, I gotta get this thing so I can. So there it is. There's day 3 Roman numeral. And so that would be looking for a price to enter. Go down to the 5-minute chart. Actually, we should be on the 15-minute chart now. So here it is. Here's day 3. Day 3 there, Roman numeral 3 in the parentheses. Here's the first green day. Comes up above the previous day's closing price, which this thin white dotted line represents 2 o'clock or 1400 New York Standard Time, Eastern Standard Time, which is the New York close, which happened right there. And enlarge that here just to see it more clear. That would be that bar right there, the little black bar right there. Right there. In order to move this arrow, it has to stay clicked. Otherwise, I could put it like that, click it, and there's the arrow on the black bar. Enlarge it to see it. So yeah, there it is. Probably move it back just a little bit. And then tap it. So there. That little black bar right there. It's not the long one, because that's the first bar for 3 o'clock or 1500. This one right here is the 2 o'clock one. That's when New York closes. So when it closed that on day 2 over here, on this side of the thin white dotted line here that goes vertical, when it closed, price came down and it started going down. Black bars going down, and it started going up. And then it crossed the closing price line, the light blue dotted horizontal line here, and it put in a high, which is the trigger to alert that a trade is coming up. Trade entry is coming up with the next lower low. There's the next lower low. This price came down, price went back up, and put in a lower low, which is pretty much right at the same level. But that would be the entry point to go down to the timing window on the lower time frame to pinpoint a sniper's entry. So go to the 5-minute. I'm going down to the 5-minute here for that lower low, because there's the first green day, which is above the dotted light blue closing line. Here we're looking for an engulfment bar, bearish engulfment, because the market's going to be going down. So we have one black bearish bar there, and looking for a pin hammer. There's really not a pin hammer in sight. The bearish pin hammer, the only one close to it would be this bearish thing here. Be more like a club instead of a pin hammer, like a sledgehammer. But go down to the 1 minute to pinpoint even further. Move this thing so. So don't really get an engulfing bar right there, right off the bat. That would probably be the engulfing bar right there, especially when it comes down past the universal moving average. So that would be the engulfing bar, and then this one right here would be the panhammer. And that's where trades would start to go in. Start scaling in trades right at that point right there, because at that point price is not going to go back up at all, because the big bankers that move the markets have locked everybody in here. So see, as you can see, traders started putting in their trades here. And then they stop hunted up here, moved up a little bit, and then locked everybody in, because they're all going to be in losing trades now, because they thought the market was going to go up. Because it started going up over here when it crossed the New York close over here, crossed at the New York close, and then started going up more. They started putting their trades on. That's a weekly level. Previous week, that bar slipped. It should go right in here. No, that's the daily level. Hold on. It's easy to previous day's level. There it goes. Previous day low goes right there. This is the previous day's high to line it up a little further. There, now go back to the 1 minute chart. So yeah, so market came up, so traders will think that the market is going to be going up, so they put their trades on. And they put their stops below the down here, because they said, it's going up because it broke this high. So usually traders put their stops down here below the lowest previous low. So they felt a little heat coming down. Didn't quite stop them out yet, because they probably put their stops 20 to 50 pips. Started coming up, and they're thinking, they're feeling heat because it came down. And it started going up, and they're thinking, oh yeah, good, it's gonna go. So they probably put more trades on, put more money on. And then all of a sudden the big bankers saw it, and they locked it in. They said, all right, we're gonna move it down. And they go straight down. Move the market straight down. And they usually move it from the green line day high down to the day low. That's where they usually move the markets. This here is a day high thing. Go back to the daily. Yeah, that's close enough. That dotted orange line goes down to the previous days. Or the current days high right there, because price is actually down here below this white line, dotted white line that's nice and bright. That's the actual price. So the price over here is 2.08129. That's the current price. So and we just put that orange dotted line at the high of current, the daily price. This black box here is today's current price. The red line is the previous day's price in this black box here. And the green line is the previous high, day's high. Day high, day low for yesterday, also called the previous day. And then today, this is today. And so current price is down here. So just put the orange dotted line here as another level, because all these levels, the purple line, the green line, the orange line, these yellow lines are all previous week open closes, previous month open and closes. These yellow lines are the previous month high and low for the open close. The purple and orange line is the previous week's high and low. And then the green and red line is the previous day right here, high and low. So when the chart goes to the weekly chart, here's the previous weekly bar. The orange line is the high, the purple line is the low. And then go to the monthly chart. And here's the previous month, because this black box here is the current month. This is last month, which last month is considered April. And so there's the yellow dotted line and the yellow dotted line for the high and the low for the month. So going back to the 15-minute. Looking for that arrow. Go back to the month. There's the arrow. Let's bring that down here. Bring it to current price right there. And go to the 15-minute. See where that arrow's at. There it is. Go back to the 15-minute. The hour. looking for the arrow. There it is. See if it'll show up now. Yeah, there it is. It's a little bit long though. Shorten it up. I just fucked up one of the lines. I have to shorten the arrow up because I'm on a smaller time frame. Using the mobile app. Alright, I just fucked this line up. And that was the daily. Remember that? Move it down here to the low. Because price is down here on the bright white dotted line. So just put that above that other one. Then tap it so that it taps out. There's white marks on each side of the screen. And when it's tapped, it turns off so that it stays in place. So there I tapped on the orange line in the middle of this. So you can see on each side of the screen on the left and right how it taps a white dot. And tap on it, it shuts off to stay in spot. So here, getting back to the 15-minute chart. And here's the arrow again. Let's be able to show what's going on. Bring it down further. There. Still at day 3, where price is at. So you can see here that price is actually making lower lows for the pound New Zealand here. So this lower low bar can be brought down. And we'll delete the arrow and look at the pound dollar. See where it's at. Yeah, there it is. Look at the euro dollar. It's still trading in the range, the daily range, day 3. So we'll go back to the pound dollar. Just keep it on the pound dollar for now. There we are, day 3. Day 1, 2, 3. Click on it. The same thing with these vertical lines. Tap on them, the dots, white dots show up. Then it can be moved side to side. This is the Asian Open, and it goes to 30300 there at the bottom, at the screen bottom. Down here, see, it says 0300. Which is, whoops, it only goes so far. It has the year 2024, the 05 month, and then the 8th day, and 0300 is actually 1700 Pacific Standard Time, or 2000 Eastern Standard Time, which is 8 o'clock p.m. in New York, Eastern Standard Time. So, anyway, so that's that. You get rid of that arrow. So, that's that. So, once again, this is the, whoops. Yeah, that's the pound dollar. Trading in the range, and then go to the euro dollar here. There it is. It's just trading in the range there in day 3. And of course, this one here had a perfect entry right there. Going down to the 1 minute chart, just to show that one again. That's in the previous video. This trade went over it in the previous video. So zeroing in on the 1 minute. Gotta move the arrow. Zeroing in on the 1 minute. As you can see, here's the engulfment bar. And there's the pen hammer. And the trade is not coming back at all. So, see what's going on over here. I guess that would be a re-entry spot. But, or that would be the 5 minute. See if there's something going on with the 5 minute. Yeah, there's a pen hammer. Pen hammer right there. So, for a re-entry to add more to the trade if one wanted to. Anyway, so get rid of that arrow and then shrink it back down to the 15. And just keep an eye on the markets. It looks like we had another lower low. Nope, no lower low. And on this particular MT4 platform, which is different from MT5, MetaTrader 5 down at the lower right corner, just above the Safari navigation icon, and then MetaTrader 4. MetaTrader 4 allows for dotted lines. MetaTrader that's MetaTrader 5. MetaTrader 5 allows dotted lines. MetaTrader 4 does not allow dotted lines. So I'm going to change the color on that so that it matches the same color as the MetaTrader 5 ones. So that's price. Price is light blue now. Doesn't allow, it only allows the size of the width of the pixel. It doesn't allow a dot. So there's that. Change the property on this yellow one to light blue. There. There's price now. Light blue. So, just waiting for the, here we have the, it's 2 o'clock now, New York close, so we can put another blue line. Have to add the vertical. So here's another one. Price is going to close here in a couple minutes. Pretty close there. So it looks like it's closed up right there. Basically 2 o'clock. And it'll put in another session area here shortly. But I'll just put a line there for now. It'll show up here eventually. I'll put that in there. So anyway, that's that. Go back to the camera. That's the video for the day. Nice and sunny out. Enjoy some wonderful bunks. Brother went to sleep around 8 o'clock, then got up again at 11 o'clock for 3 hours sleep, plus 2 hours in between the London and the New York session. So 5-6 hours sleep. And I'm feeling tired though, because I've been marking these charts. Spend a lot of time looking at this mobile smartphone. It's hard on the eyes. Anyway, so that's that. Yeah, we got some chicken cooking in here, or bone broth, skin, tendons, and bones. It's day 2 cooking. Might as well get the lint out of the dryer. Fluff the clothes up that are in the dryer a little bit. Fluff those up in the dryer down here. And then go inside and have a meal. Start the day. Anyway, that's it for this video. Later. Oops, it's not that one, it's this one.